So 24 essential lessons for investment success. Bill O'Neill's book.
Thank you.
So the contents will cover basically the first 8 chapters. What every investor should know. Getting started, following a system rather than your emotions. Fundamental or technical analysis. Fundamental earnings and sales. RSA, a key tool. Know a stock by the company it keeps, importance of volume and sponsorship. So then next month I'll do the next 8 chapters, we'll get through it in 3 months. And if you guys don't have the book, I mean, when I did my first meetup, the guy that was doing for IBD came and he gave me a whole bunch of these, like 30 or 40 of them.
Oh, wow.
Yeah, and I haven't, they're cheap to buy, you can find them used or whatever. Okay, number 1 rule of investing.
Actually, if you guys sign up for a coaching session, you can request this book and they'll send it to you for free.
So that's good to know. The number 1 rule of investing, learn to cut losses early. So Loeb was a really good investor. This was rule 1 for him, and he used a 10% stop loss. Bill and IBD set 7 to 8, and Bill, if you've listened to a lot of his talks, he pretty much doesn't get much above 4 on a loss pretty well. It's like buying insurance. You know, you wouldn't have your house somewhere and a big mortgage and not have insurance on it. How you think about the loss will mess with your trading mindset. So if you let one of these get too big on you, it pretty much destroys your whole persona of what you're doing. You can't get yourself back thinking right. It takes time and effort to invest. As you get better, your loss percent will get smaller. So I tried to summarize these chapters down is what I'm trying to do. And I think the one before this one's really important even for me. So if you're taking that 7 or 8% loss and then you see the thing bomb 30%, you feel really good. Better than you do if you're still holding it, for sure. So that's one of the reasons you have that rule.
And if you read Loeb's book, he mostly says that he would never really wait till 10%. He was always out at 5%.
But that was his maximum.
Yeah.
Like a no matter what, he's gone. Getting started. Any time is the best time. People always think, and we've got, most of us in here are investors and have done a lot of this, so, you know, it's, for us, you know that. I mean, a lot of people wait until, I want to wait until the good market. Well, anytime, until you put real money in there. It takes a couple of years to learn to invest successfully. I mean, you're always learning. You'll never quit that, but it does take a little bit of time. Open an account, avoid low-priced stocks, futures, options, and foreign stocks. Keep it simple when you open your account. You can start with $500. You must trade real money to feel the emotion. A lot of people try to trade paper money in all these accounts that you can do that with. That's all fine and dandy. But once you put your actual money in the market, it's a different game because your emotions play with you so much. And a lot of people, I've met a lot of younger people and they'll go ahead and do, I made all this money. And yeah, I said, just put $500 in there, $1,000 and see what happens to you. And usually they lose it. Concentrate on high quality stocks and keep the number of them to a minimum. You don't need a whole bunch of stocks, you just need a few good ones. So if you have 5,000, 2, 10,000, 2 to 3, 50,000, 4 to 5, there's no reason to own 20, you can't track them. So if you get a whole bunch, you're just going to get confused. And even Bill goes on, $1 million accounts may only have 6 or 8 maybe. Oops. Follow a system rather than your emotions. Hoping when you should fear and fearing when you should hope. When you have a loss, don't hope it gets better. It's probably not going to. Cut your losses first, not your winners. Another big mistake. We all do that. Tend to sell the losers or sell your winners and keep your losers because you're hoping those get back up. Don't average down. Don't buy cheap stocks. In the book it said $15 and down is considered a cheap stock. Your mutual fund companies aren't playing there. They want to get rid of a bunch of cash at once. They don't want to buy real low price stocks. You will have a few IPOs and some things that they do, but normally to get rid of a lot of cash, they can't do it there. Price doesn't matter, only percent moved. On the flip side of that, $150 stock, it's too high. A $600 stock, because there's those today, it's too high. It doesn't matter. It doesn't matter if you can only own 10 shares, it's how much it moves percent-wise. Plan your trade before you trade it, and do a post-analysis after you close it out. So in other words, You know, when you buy that stock, go ahead and set where you think you should get out, kind of look at the chart, get some ideas, and decide what you're doing, and then keep track of your biggest winners and losers, and, you know, look at them later on, print them out or put them in a spreadsheet or something. So everybody's always asking, fundamental or technical analysis? The answer is both. Fundamental for strength, quality, and soundness. Most important, earnings, best of the best, have over 30%, the best of the best have over 30% earnings per share over the past 3 years. The last 3 quarters earnings per share up 25% or more, and an ROE of 17%. These are all the things we've been going over. You know, pretty well, if you use the stock doctor in that, you're going to see all this stuff without putting too much effort in it. And a unique or exceptional product. For the technical side, for how it is performing in the market. Price and volume shows institution movements use daily and weekly charts. So you're looking for volume coming into this stock where institutions are trying to accumulate this stock. Learn to identify price patterns and how to follow the general market trend. And you're going to do that if you're working with this just a little bit. You're going to start to know patterns and everything. So more on fundamentals. Your object is not to always be right. It's to make big money when you are. To make big money, you have to buy the best. Most important is strong and increasing sales and earnings monthly and yearly. So he's saying that's the very most important. Also look for strong return on equity. True leaders are above 30%. And you know, that really thins the herd real fast when you start looking for stuff like that. Use the EPS rating in IBD 1 to 99, 99 being the best. Look for stocks making strong and long consolidations in a correction. When a new uptrend starts, be ready to buy the leaders out of a base. And you know, that's pretty well key. We haven't had a correction now for a little while, but we will eventually, and then there'll be strong ones coming back out. Well, we did have a correction, what, 8 months ago already. Relative price strength, a key technical tool. RS shows you when the price action compared to the market. RS of 80% or higher, true leaders are 85% plus. Also use an RS line on a chart. The stock with an angle up is the stronger candidate. And you were just telling him that. What are you doing buying this when the RS line's going the wrong direction? You want to see it wedging up. Look at the company. It keeps other stocks perform in related industries. So when you're looking at one, look at the other stocks that are related to it, or maybe even in industries that are sub-related to that, because they all tend to move together. If there's none others moving with this particular stock, it's really either got one heck of a story or something going on, or it's just a dud. Evaluate your holdings by the RS to see the ones continuing to rise. Do not add shares unless the RS line is moving up. You may consider selling when it drops below 70%. And they had an example in the book, and they were showing this. So you've held a stock through the long run. It's going into that topping pattern like we were showing in the last meetings. And so one way of getting out is when the RS line on that chart starts hitting 70%. It's showing you that it's no longer leading amongst all the stocks. So that's kind of a good point.
Sam, the RS, is it to industry or to other stocks?
To other stocks.
Other stocks.
Yep, the market, compared to the market. No stock by the company C. Did I go through this one? You want top sectors and industry groups. Sectors are broad. Okay. You want top sectors and industry groups. Sectors are broader than industries. So we rank our stocks by sectors, and then inside the sectors there's sub-industries. Right now there's 197 industries in IBD. You want to see at least one other leader in your stock sector also leading, just what we were talking about before. So they're kind of expanding on the last slides. Are big institutions investing in big cap, medium, or small cap? So they're saying when you're doing this and you're finding these leaders, you want to figure out, is the market moving towards big cap stocks or small cap? Are the mutual funds companies playing in the mid and small, or are they playing in the bigger? You want to know that. Check the strength of your industry group. You want to be in the top 20%. Is that lightning?
Yeah,
I think
that was
so.
thunder.
Every day, check expanding 52-week high and lows. Top stocks show up here. So when you go in and you're looking at those extended data tables, The 52-week highs and lows, the extended ones, there's a chart in there, and we'll go look at that here in a little bit. More clues of top sectors, groups with highest percent of stocks at new highs. So that's more clues on where you find the top stocks. So in the groups, when there's stocks, the highest percent at a new high. Importance of volume and sponsorship. The law of supply and demand. Stocks never go up in price by accident. Use the IBD volume percent change to find big institutions investing happening. So when you bar over, when you're in IBD and you can bar over and you click on the mouse, it'll tell you percent change. That's really important to look at. Now you found the volume. Is it buying or selling? So now you've got volume. Are they buying it or are they unloading it? Use the accumulation distribution rating A to E, because that's a broader, it's 13 weeks out, so it's giving you more of a time frame, and A being that it's being accumulated in E, and that once again is in the stock doctor, it shows you that. Look for top performing institutions to own some of the company's shares. You know, one advantage we have with Market Smith, we can pull up, okay, who owns this? You can do that other ways too, and see that some big mutual fund companies are buying shares. Those companies don't usually jump in and out very fast. Look in the mutual fund section and view news buys and sells. We've talked about that in the last few meetings. And so your true leaders, the stocks are going to be showing in there that those leading funds are buying them. Check the chart for proper buy patterns to find the right time to buy and the stage. So you figured out this stock and everything. Now you want to look at the pattern on the chart to see that you're in the right position to buy the stock and own it. Check the IBD sponsorship rating. You know, make sure that they are accumulating it. Keep your nose to the chart and the fundamental ratings. So the next 8 chapters we'll do next meeting, and that was it for that. So I hope that was helpful. There's actually a lot of information in there, and I tried to summarize it. Each sentence actually means a lot if you really get looking at it and think about it. So that's why I wanted you to have the handouts. If you haven't read the book, probably should. Anybody got any questions on that? Everybody's quiet.
How do you tackle the big news like Trump giving speech and saying defense is going to be big, and how do you
Ignore it.
Yeah. We
You don't listen to the news, you don't turn on the TV, you watch the price action of the chart. Period. You put the voice on mute. I'm serious.
So last month we were going over using this, what do you call these that I just went into?
The stock tables.
Stock tables, there you go. So we're reviewing the time saver. When I was going through these 8 chapters, one that come up for me that's really, if you really want an eye-opener, look inside this IBD large mid-cap leaders index and the small cap leaders index, because I was trying to find back in the paper they used to have a chart that showed you whether the mutual fund companies were in the small caps or large caps.
They still do.
Is it in here somewhere?
Well, it's in the...
It's in the paper, but I wanted to find it online. Well, I
It's
didn't.
right here. Right.
Well, these don't have, it was an actual little graph. But what's amazing about these 2 lists, and I'm not going to open them up, all the leaders that we're messing with, they're in these 2 lists. If you want a good list to go look at and find everything we're playing with, these 2 lists got everyone on them.
So to make a point to him, open this real quick.
And I hadn't looked at those for a while, but they are all in there. And some of them are headed down and some are headed up, but they're all in there. And these take a little bit to load. It's a pretty large list, but...
So what you want to do is, they always rank it by comp rating and relative strength. So the stock you're shorting, Same industry. Same industry. There's another one in here, but you got 3 of them. But one of the things that you do is, this is already sorted by comp rating, so this is another version of the time saver table.
Whoops, I didn't want to do that. Let me get back there. I was going to answer a question for somebody.
David, the comp is short for what?
It's putting the whole package together. O'Neill had Mike Webster develop something that would summarize all the ratings of IBD into one number, comp rating. So it's
Composite, maybe.
It's short for composite, yeah.
so it's EPS,
It's all the
RS.
metrics weighed in,
Yeah.
gotcha.
So when he had that created, he then created the time saver table. The time saver up and down columns, top 50 stocks every day.
Okay.
And they're ranked by comp rating, significant leaders that were there. So that's why he always, 99, 98 are always circled on the buy side. That's his buy. He's only buying stocks that are in that oval circle.
Okay.
So Neil restricts himself to 99, 98.
Right, which gets you down a little ways.
But these are all the leaders that have been leading the market for some time.
Yeah, if you look in here, there's a lot of names you see.
And then you had us last week download the app. Is this on the app or is that a
No.
level higher in terms of?
Yeah, this isn't on the app.
The app basically just has the stories.
The app's just good to get the news,
Gotcha.
and so you can keep up with, and not have to read online the paper as much. So it's good for that. Let's see.
Can we look at the time saver table?
Sure.
So one of the things that,
This
if
thing-
you're,
This is on the website. Is that a pay package or is that?
Yeah, these are under pay.
Okay.
Mike, it always does this to me. Is it under market trend or which one's it under?
it's under stock tables, stock lists.
Stop this.
Yeah, I had that open. And it closed on it.
You got something else open over here.
Yeah, I don't know what it's doing. It's because my screen's smashed together.
And data tables?
There it is. If I roll the mouse too fast, it disappears. So what do we want to look at now, time saver? Where are we going with this?
We just want to look at time saver.
It's not updated. Is it updated?
Yeah.
Right. So these are what Dave's writing down
So
today. We got
one
a
way
lot
that you can
before.
tell that the rally's losing steam
Got
is
4
if the top, there's only 50 names here. You want strong rally, comp rating will be 95 and higher. When you drop below 90, so right now you only got about 15 stocks out of 50 that are 95 and higher. So the laggards, the lower crop of leaders, and now when you break 90,
And when you look at this on a regular one, it's going to show you the price percent change. That's key to knowing which ones are actually, or volume change, percent change. That's key to knowing which ones.
so when you get break 80, you got laggards barking. So when you're in the 70s, you're getting close. Now you pay attention to how many stocks are showing up here, and you're looking at the volume. And here's your 3 leaders. Brokerage, the stock he's shorting, he might get lucky on because one of the leaders is breaking down, which is that stock. So before you sell that, that's the stock you want to pay attention to. That's the leader of that industry on that stock you're getting killed on. COHR. If it's going down, you got hope. If it starts recovering, bail. But one of the things that's been noticing is you guys want to pay attention over here because this table's been loaded on the downside with volume. There are leaders breaking out, and there's a lot of what I call the platform cliff diving on the stocks on the news on the downside, where the stocks are diving below the 50-day because they're missing earnings. They're showing up with the 999 over here. So NVIDIA basically ran into its resistance at 105. This has been a home run from the 30s. This has just been a low stellar. This is Fidelity. Fidelity and Schwab are in a fee battle to take over all the small companies. TD Ameritrade I avoid, E-Trade I avoid because they rely on commissions. Fidelity's now at $4.95. Schwab matched it to $4.95. So E-Trade at $9.99. If they match Schwab, they're going to be losing money. So, let alone customers. So you do not be messing with this stock or this stock. But there's a lot of hype. When you start seeing the biotechs and people saying biotechs are ready to break out, the biotechs are showing up on this list left and right. So biotechs I don't think are going to lead. So just be aware of that.
They're a good gamble.
What about steel? Any hope for steel?
Sure, if an infrastructure play gets done. So tonight's speech, concrete, pay attention to those. But so go to Market Smith and let's look at steel and
Here, let's
concrete.
wait a minute before we do
All
that.
right.
So there's a few more things in here I wanted to go over. So here's the expanded 52 weeks highs and lows. Here's the new highs list that we talked about last month. But here's the expanded one. So that one's a little bit longer. It's more based on the sectors that are leading than the other one is. So that's good to know that. What else did I have down? Sectors and industries. Industry subgroup rankings, that's good to look at. You don't have to look at these every day. So we're trying to use this, new highs and lows. And we're coming in here, but I'm telling you, take a look at these two here because there's a lot of them in there.
Well, this one too. You want a shortcut that combines those two lists? There it
Yeah.
is right there.
And keeps it to 200.
There's your top 200. It basically combines the large cap, mid cap into one list. So this is this one wasn't O'Neill's favorite, this is his second favorite. Because those are your 99, 98 comp rated stocks. And that's where you want your stocks to be. So actually, if you want a watch list, there's your watch list. It's 200 stocks. And especially, that's a good shopping list when we're in like November, that Friday going in, that weekend before the election. If you were looking at that stock, that gave you several stock ideas. You match that with the IBD 50 and look at what the IBD 50 is saying for the mini charts, and you're set up to go.
Okay, so from here we can go wherever we want.
Want to go through Dave's favorite screens? You know.
Yeah. I want to do a couple in the regular thing.
80, 85, that type of thing.
Right. We'll go through those. It's not coming up, is it? So let's go look at our...
Where are you trying to find?
well, I'm setting myself up to do some other stuff. But before we do that... Gonna go in here and look at our... These.
So I got, I will want to comment on this, so open that up. He's not here tonight. So one of the questions we had last month was when that arrow fired on the 30th, and then shortly thereafter we had the rally that when you compare, so we never got the second or third arrow, but if you look right here, we actually did get a spike over the 50-day and a close, and the third one's right there. So this has actually dropped off the distribution count list because we're at that's 30 or 28 days in the past. So this is actually, it's more than that because the January 19th went off yesterday. So this is 12:30 when this fired. So one of the things that if this becomes too long in time, it can become non and void. Although this didn't fire a red arrow, if you look at a lot of the charts, the market was pulling back on those 2 days where the market basically was bought and there was so much buying pressure that we went up. So arrow 2 and 3 are essentially right here, although you didn't get 20%. So one of the things that I'm modified based on, I've kept this data since they introduced it for the last 3 years, and my sets of 3, there's been 2 cases where it was non and void, and both cases was when that arrow only peaked at less than 22.5%. So if this never spikes above 22.5%, it's a potential ignore, and you look for other signals where you have pullbacks. And if you go, we'll look at the composite chart in a minute to show you where these actually were viable dips. It came down to the top of the 21-day moving average or the 10-day, and the market was absorbed. Okay, that's what's been happening all through here. That's why this. But notice the thing that's happening right now that you guys need to be careful. If you are long, you need to identify places to hold stuff out. You need to identify where your exit point is. Everything that you own, you have to have an exit plan right now, because this 10-day moving average is turning up and it's about to cross the 10-day, and all of a sudden now this is all above the 50-day moving average, and now this is spiking. So there's a good chance, because of the State of the Union tonight is being done, that you're going to see a spike up right here. You're the guy I wanted to mention this. Our question right there, there's arrow number 1, potentially there's arrow number 2, there's arrow number 3. My limit for this being a real signal, it's got to go over 22.5%. There's been 2 failures in the past 2 years. This one, so we'll know here very soon over the next month. But a lot of turmoil happens at the State of the Union after it's given, because the reality starts setting in that, hey, the tax code's not going to be changed in 3 weeks. It's going to be probably closer to a year. So whatever that message is, you're probably, Reagan, it also happened on, several other presidents it happened on, Obama it happened on. If you remember back in 2009, before we got the real rally, we actually had a bottom that occurred in October 2008. That rally died at the State of the Union address. And then we went in and set the bottom at the March 9th buy of 2009. Well, what happened was Obama laid out his plan, and it was all about the Affordable Care Act that it became. And the market didn't like it because they didn't understand what he said. So there could be a lot of that tonight. That's what this is signaling. Okay? So just be ready. But the fact that this is moving higher and you're closing at the top, and that was a gap up, and see how all these other gap ups closed at the bottom of the day? This is a character change. Heed the warning. Okay?
You wanna look at the put call?
Yeah. So the put call ratio is basically just normal for this chart's actually one of the charts that's becoming more normalized for a rally. This is what you expect to see. Going into, so there's your buy point off that VIX arrow. Follow through day happened a few days later, and then you had a few pullbacks. These are rallies, and there's this is VIX arrow 1, that's VIX arrow 2, that's VIX arrow 3. So that's why I say we potentially have had the 3 arrows. They were just, it was a small, subtle. There's so much buying pressure on everything. The chart that shows you that we're in trouble is the small caps. Off the election, the chart that Sam was saying, November, small mid caps were outfavored over large cap. That's in a downtrend now. And the one leading the charge is the small cap 600 index. We'll look at that in a minute. But these 2 arrows, that wasn't a strong buy signal because it never peaked above the 1.2, but it did get the 1.5, and these were above 1.0. I am not buying that this might be a buy the moment. We'll know in the morning. So,
Buy or sell?
well, the put call ratio is saying buy because it's over 1 again. So the high-low ratio is
Still
peaked at 12.02.
nice.
The sector leaders peaked at 9. Sector leaders are down to 5. We'll know more about Avago tomorrow or Thursday. But I can't tell you enough. One of the things that Comp 200 list, when you have this set up at 0.5 or you're approaching 0.5, and if you remember back in February, it was below 0.1. The weekend review, you want to study the mini charts of the IBD 50 and that top Comp 200 list. You'll have buy points. There's 3 or 4 setups in the IBD 50 on those mini charts when you're on that day. That weekend, November 4th, if you were pouring through IBD, you had 5 stocks you could have bought based on those mini charts. One of the things I've been doing is going back to these spikes and looking at the weekend paper of the EIBD. If anything, you guys save those EIBDs. You can go back 20 issues without saving, but if you start saving, you can always go back and correct your mistakes and see. But I guarantee you, when we're in corrections, especially in February, it's the middle portion of the IBD 50 that's probably going to have your surprise leaders. In March, NVIDIA was around 16 to 19 from the end of February to 19, and it moved to the number 1 slot. But inside the IBD 50 articles, the mini charts were saying, I'm a buy at 34.35. Buy me at 34.35. Buy me at 34.35. Who bought it at 34.35? Woulda, coulda, shoulda. So let's go through your indices. So one of the things that we noticed coming out of the November election was small caps and mid caps were racing. If you were looking at that one chart, you knew the comps. The comp composite average was lagging. So let's look at the daily. Is that your first one?
Yeah. Is this how they're set up?
So the robots are keeping good time, keeping this. So in perspective of this rally being 12 days in a row and being a record, we went up 3.9% in those 12 days. The other time in history, for 12 days in a row for the Dow, it went up 32.9%. So in perspective, this is the robots playing games. Again, what are your averages? That's the 10, right?
Right there.
So the 10, 30, okay. So notice how during the 12 days, we've never touched the 10-day. That doesn't happen normal. We're at least pulling back to the 10-day, and when you go parabolic like this, more than likely you got a date with this line right there, if not that line. But this is becoming a little unhealthy.
90%.
So at 11%, I mean, it's basically signaling that we're at the start of something fun, but before the fun continues, it's time to reset the chart. So the composite with the energy and everything, this is getting a little extended too. The RS line is telling you it's getting a little extended, or is extended, and it's actually breaking down to the downside. So put your cursor across there at the bottom. See how we've broken below? So that's a common theme. So as we continue through, the small cap 600 is screaming. So the first chart I look at every night is the mutual fund. And the mutual fund has been lagging. And the primary is because the mutual fund index is 50% large cap, mid cap, 50% small cap. And when those start value, they start evening out, it starts to lag. So for a good uptrend, you want this, the IBD mutual fund chart, to be breaking out. So volume's lagging off. You had a lot of volume right here during that sell-off. So in December, you see how leading into that big drop going in, there's your first fixed arrow, there's your second fixed arrow, there's your third. You're getting support at the 21-day or the 30-day exponential 21-day moving average. So that's why I say there's your VIX 1, there's your VIX 2, there's your VIX 3, and then we're off to the races and we're reset. To me, it's been reset. So because of all the gap up, and notice you got higher highs, you got lower lows. In today's action with that high almost hitting, look at what the RS line is doing. And actually that's yesterday's action, because is that updated today? It's not updated yet.
Are you saying that's 3 stages since the reset?
What?
Those charts, are they showing 3 stages since the reset? You said in your mind it's been reset.
You're not going to see it on this chart. We need to go back to the S&P 500.
So were there 3 stages after that?
Well,
Reset?
3 pullbacks, not 3 stages.
Oh, okay.
First pullback to the 30-day, second pullback to the 30-day, third pullback to the 30-day.
He's just saying that corresponds with what the VIX did.
Yeah.
It shows up on the VIX. It's not, those aren't stages.
But this is basically an exhausting, so the mid cap, so again, before you head, this is, what day is that? Is that yesterday's?
That's today's.
So that's today's, you said.
This is hard to do.
Yes.
This is 28.
Well, the problem is, it's got the data there,
But
but
it doesn't
the
have the
price
bar.
bar is not there.
The price
Because-
bar is missing.
That's the point that I was making. So you closed at
Yeah, see,
46,
there's
so you
20.
closed below that low right there, so where's 46? So you're actually closing below the 30-day today. And put the cursor across there. So this chart is basically saying we're going down. So what, and that's in a downtrend. You see how we barely made the higher high? So the small caps were the leaders of the market. They're leading now. They're only telling you which way we're going, and it's going down. Which is normal, and that should be healthy so it can get some buys set up. So 3,000, same type of story. You're not really making much progress. So what this is a form of stalling in distribution. When you see the RS lines go nowhere while the indexes are just moving up on light volume, there's rotation and there's volume coming out of the market. And again, if you've been noticing the downside on the time saver table and the stocks on the move down, that's what it's been showing. So this is lagging. So coming out of, this is setting up for a strong rally. You just want this to correct down. So here's your strong first uptrend, and now you want to pull back so that we can get leaders setting up. Which this is also going to be the place to go for your shopping list when we do get the pullback. And the large cap, look how the large caps are just waning. So you're at all-time high and you're nowhere close to setting even a high for this 3-month time. So one of the things O'Neill Books talks about when evaluating the RS line is 3 to 4 months. That's the breakout point for evaluating this RS line. You want to compare the current price back 3-4 months. So at the end of February, there's 1 month, 2 month, 3 month, 4 month. So you basically want to know what your line looks like right there at the November rally. So you did have a breakout, but you failed to take out the previous peak. So that's basically telling you here's your strong uptrend for the new start, 30% rallies on individual stocks. You go into a chart pattern where you basically consolidate this a little bit, and we reset the rally, and that's probably going to be an exciting time to be in the market. So the new America is, well, it's still kind of in a, this is lagging significantly. It's failing at the old high, but again, it's setting up. And gold and silver don't know what they want to do.
That's what they're supposed to do.
I would ignore them.
Okay, you mentioned looking at the relevant strength over a 3-month period to get a
Did we
sense
get the comp?
of the direction.
We haven't looked at the composite average yet. What's your question?
So you mentioned to take a look at the relevant strength for a period of 3 to 4 months to get a sense of the overall direction. Is that kind of what you were?
Well, you want, when you're in a leading stock, you want the RS line to be higher highs.
Yeah.
As prices going higher high, you want RS line to go higher high. Here's a great example. November, here's your peak. You got a new high, but right at the bottom of the downtrend, that peak right there is what you care about. Where are you? So either we're pulling back, so this is going to be critical. This is the leading index right now. All the lagging index are breaking down to new high ground based on the chart. You can refer to this as a chart pattern, just like we do right here as a chart pattern, where you see how those lines right there shows that's the breakout.